Bring me sunshine all the while. Bring me laughter to make you smile. In this world that we live, we trade unhappiness. Oh, I love a sing song. But why is it happiness and why am I happy? Let's find out.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, the vocal talent, that is the scruffy trader. Well, say that in inverted commas. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit that subscribe button. Genuinely helps and motivates me to do more. And if you like the video, do hit the like. So where are we going? What are we doing? Well, I did a trade this morning on the DAX, which you often see me do. And I'm going to reference a comment from within it and also kind of show you something to illustrate. So let me flick this over. Right, this is sort of my live account. Now this is currently sitting 200 quid against me. Am I worried? No. Because if you look, I have all staged orders, but I also have staged profit points. And I also know where I'm going to get out. Now that's the important bit. Know where to get out. Now in this particular trade, because I'm looking at a 4-hour chart, it's a longer chart, I have a couple of structure points that we can look at straight away. Well, this cluster here is a structure where I'm going to average in. Now averaging in is slightly different. And then if it breaks through this bending point and then down through this cluster point, I'll be getting out. All right. So let me explain where this has come from and why I'm sort of talking about it. Give me a second and I shall show you. So this is the video that I put in. All right. So we'll just pause that a second. All right. So it's the paid before breakfast this morning. Now, every comment that comes in, regardless of who it is, I answer it. And some of them are great and some of them I have to sort of think about, which is kind of today. And this one here from Clue, little salute to you, because it's a wonderful subject you've brought up, but it's also a worrying subject. So I'll let you see the comment. Okay. It's kind of my response, because I genuinely think tight stops are a waste of time. I think they're more damaging than they are good. Okay. But what he was saying is, how do you manage your drawdown? Well, that's exactly what I was getting at with that little illustration there of showing you a trade that is running now and how I will look to manage that. Now, earlier on today, we were discussing various bits and pieces. And if I just sort of fire back to the screens and I'll just highlight it, just a second, just really to back up what I'm about to talk about, guys. In this lot, there's a notification of saying where the value points are and how I'm going to trade the DAX in the first place. So there it is there, 8:15. We were discussing this before it. Okay. Now, this was in the Telegram because I was kind of just putting it across for these guys. And you can kind of see what I've done out of that. Oh, okay. Wrong one. There we go. And you can see what I did this morning. Now, I was done by 8:30. Okay. I had committed into the trade, as you can see, at around 7:30. All right, so it's before the open. I was committed. I was going with it. All right, so that's sort of in the Telegram. That's a free service, by the way. You'll get your sort of link in the description, and it's literally just to have a chat amongst yourselves safely. But if I pull up the Discord, just a second here, and we go through what I call a scruffy bias. So today at 7 o'clock, I gave them a heads up that I'm going to buy this thing. All right, but keep an eye on the Aussie. All right, so that is no trade. At 8 o'clock, I told them I was in the trade, you know, because I update this on the top of the hour. So I'm in the trade. I found it. And it is now telling me to sell and start looking for a trade on the Aussie dollar. Now, I don't trade between 8 and 8:30 if I can help it. And then I confirmed that trade at 9 o'clock and also informed that this is done. Okay, so that's what we're doing. Then in the indices, if we start working our way through, talking to the guys about what I've done, why I've done it, but more importantly, this is when you start having a chat about what's going on, how you're going to do it, blah, blah, blah. All right. And then on top of that, give them ideas of the week where I do videos for them saying, this is what I'm going to do, why I'm going to do it. Now, today's trade was shouted yesterday. All right. And all the way through that, and I hope the guys are watching this and confirm it. I kept them out of the DAX yesterday because it was dangerous. Well, I didn't keep them out. What I said was, I ain't trading it. And this is my reasons why I ain't trading it. And this is what I'm waiting for. And those conditions came this morning, traded it, got paid, as you've seen. All right. Now, I mentioned that keep an eye on the Aussie. Well, there's that one. It's just ticking away just nice. It's now moving up into profit. Now, this might take it till Monday, you know, because it's a swing trade in a cap. Let's have a look at my history. Well, it's done. Oh, I don't think you can see that properly, can you? Let's pull this up a little bit. Oh, you could see it, sorry. Aussie dollar, $1,000 this morning on this account. So I'm quite happy with what I'm doing. All right. So what gives me the authority to talk about this? And why would I talk about it in the first place? You know, because surely anybody could do this. Well, in fact, what I'll do is I'll show you. Hold on, let's have a look. So we'll flick that back over. Oh, there we are. That idea is now starting to come into play. So that was good timing. So if I pull up some equity curves, so there's a statement. There's another statement. There's another statement. And if you want to see the equity curve of the account that I've just pulled up that you see in gold play, there is the current equity curve. That particular account opened with $50,000 on, just pull that back, on the 1st of May, and it is now currently sitting at 77,000, right? So, yeah, I think I can speak from authority, because when you look at those equity curves, the market don't go against me that much. So why is that? What am I driving at with all of this? Well, it's really to get you to think about, are your stops the be all and end all of everything? Because personally, I don't think they are. I think they are probably what costs you money the most.
Are you serious?
And when you're trading, you're constantly told that you have to have your big risk reward, you know, you 1 to 3, you 1 to 4, all of this. In theory and on paper, it is amazing. And why is that? because it makes you think that you can be mediocre to terrible and still make money.
No way!
No. What they're trying to do is reinforce a bad idea in the first place. You know, how do you sell a product that has, well, let's put it another way. How do you sell a product that doesn't have a positive expectancy?
They've done studies, you know. 60% of the time, it works every time.
That doesn't make sense.
You put a spin on it. And that spin is playing with numbers. So they can say, well, if you have 3 to 1, you only have to win 4 times out of 10. All right. That means you're losing 6 times out of 10 in that theory. Okay. What if those 6 came at the same time? Boom, 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 boom. Are you going to pull the trigger in the first place? Chances is no, because your emotional concept will kick in. You'll be frightened of it. Right? Now, the other emotion to that is you'll also be angry with it. And if you're angry with it, you'll lash at the market. In other words, you won't even think about it. Now, I have different mantras, and I use them all the time. And I wrote one on the board for today. Say it, plan it, trade it. And that's something that you have to get into your head. So you see your trade, you plan it out, then you trade it. You don't trade it and then see what the hell's going on. Because if you're going down the route of all of this sort of 1 in 4, 1 in 3 and living in la la land, you're going to find that you're going to lose money. Because money is the next element to this. Because not only are you frightened of it and you're angry with it, the money side comes into it, the equation as well. And they never ever say this. Because if you're going for a 1 for 3 trade or a 1 for 4 trade, and you want a positive expectancy, well, that means every trade has to be the same. Each stop has to be in the same place, and each target has to be the same place. Now, the reason I showed you at the beginning a trade that's currently running was very simple. I wanted to show you how it was vaguely mapped out. I mean, if you want to see exactly how I trade and what I do come to the Scruffy Squad, because you'll only ever see a snapshot on YouTube, as you will with any YouTuber. It's just the way of the world, guys. There's no free rides.
If you're good at something, never do it for free.
But what you'll see in the Scruffy Squad is not only how and why, but a community. And that community all learn and pull together. Because ultimately, trading is around frameworks, not rigid, fixed stops, fixed targets. There's a couple of adverts that come up on the front of my videos that annoy the living crap out of me. They really do. Oh, if you're using these candlestick charts, give up. I'm the only real trader. I was on Barclays Bank. Bollocks. Because those traders do use candlesticks. You know, trade without emotion. Have a set of mechanical rules. Bollocks. They all have rules. And it infuriates me because they're trying to make out that trading is simple and you just follow X marks the spot. No, not at all. That is the land of this tit.
You ding-dong!
Fuck me, he gets on my butt and all. When I see things like that, it boils me up. Because trading is a job and a professional career. And like any job, it has to be planned and there's certain skill sets within it. And if you want a £50,000 a year salary or 100,000, whatever you're aiming at, you've got to have some form of nous and some kind of skill. You know, it's not just click. You've got to be able to plan it. And that's kind of what I'm trying to get across. And certainly in the videos that I show. Now, in the trade that we did earlier on, and let me illustrate something. Just a second, and I'll switch this switch this back on again because I want to pull up the trade I did this morning.
Well, we're waiting.
Okay, so this is the chart that I was working on this morning, and the chap said it went against me quite a way. Well, I got in not far above this red line, okay, and then I had a staged order in at the 23 level with an ultimate target of 38. But the way I work is I don't give a toss about any of these levels because I'm not in this to be a hero, and I know you've heard me say this before. I'm not. I'm here to be paid, and the least time I'm in the markets when I'm day trading, the better. But I have to have marker points, and that's what these dotted lines are, my solid lines. And I'll map out a move so that I can see it mathematically. Now there's 7 o'clock, okay? And you can see that. So that's between 7 and 8. I was paid royally in this time, okay? Got probably half of what I was after in this candle. I had some runners left over, and I had a couple of extra orders that I wanted to add in because I like to get to 200 quid. This is 8 and 9. Again, now because I work from hourly charts mainly, you'll see me on a 5-minute chart, but all the decisions come from an hour. The swing point is here, all right? So I can manage into this all the way down. And I don't care if it goes against me as long as I have a premise. And my premise is whatever direction. In this case, it was to the long. And the premise was strong drive down, cracked the levels, held above the levels, and then work to key points. Okay? Simple stuff. I also let candles close. So that slammed down and then slammed straight back up again. So in reality, it looks bad, but it didn't go against me that much. In fact, it hardly went against me at all in the grand scheme of things. And the grand scheme of things is I work to a certain percentage of the account. This can drop quite a way and it won't damage my overall account. That's the way I think. And then there is the results from that trade. You know, in fact, at 468 we did at breakfast. Fantastic. You know, how good is that?
Good job.
So there we go, guys. And it's just something to give you some thought about your stops and other things you need to start. I mean, if you're looking at a chart like this, this is a web trader. The other one was MT5. And I do get asked, what platforms do I use? Well, for me, I like BlackBull. This is MT5. The one you've just been looking at was IG. Why do I like BlackBull? Well, because it's cheap cost. And again, I'm bringing this up because in the Telegram, if I move this up further, somewhere, is it up here? Might be further down actually. Oh, there we are. Little salute to David. I was bringing this up for you. He was asking if he's going to do a swing trade on the DAX, who would I use? Well, if you're in the UK, look at your spread bet accounts because they are tax efficient as long as it's not your sole income. If you're looking down a route of a CFD, BlackBull, they have both web trader and MT platforms, so superb. Their spreads are, well, doesn't get any cheaper than zero. Next to nothing to get in, but if you do want to put some leverage into it, it can go up to 1,500, so you get more bang for your buck. So that's a route to go. And then another route to go is if you haven't got a lot of money but you want a bigger fund, you can use a prop firm such as the 5%ers, and they are now offering indices in their instant funding. So what you could do is you could go into market with sort of these guys use a small amount of your money, but then use all of their money, and their leverage is pretty tight as well, depending on the program that you're in. But what I'll say is, when you're looking at leverages, guys, leverage is just buying power in order to get into a trade. The account size is what you want to be looking at, because if you're on £1,000 an account and you think, well, I can 500 leverage this and put a 20 quid a point on, it won't take long to blow that account. So you still got to be careful about your position size. But while we're here, to give you an illustration, if you are unsure, you can use the boot camp. It's €85 to get in. You pass some challenges, you get a 100k account. If you want to use the freestyle, well, freestyle is a bit different because you've got to prove yourself over 100 trades, but then it's based on your profit factor. So you need to be making more profit than your drawdown. Common sense. But again, it's not as difficult as it seems. It works on a netting account rather than individual account. I have done videos on it. That's 285. But if you're wanting to push your boat out and get funded instantly, make profit from day one, and have indices, look at this platform here. This is the one that I use myself. I do like this. Again, you buy in very cheaply at 235, but if you want a bigger fund, you can go 745, get 20 grand straight away, and all you've got to do is turn it into either 1,400 quid and you start getting your payouts, or 375 and you start getting your payouts. And every 10% they will double that account up to 4 million. So that's another way of pushing your pennies out without bursting the bank, because that's the other side of trading. It's your money management, guys. And if I just touch on that a second, because too many times I'm asked, how do I turn a small amount into a massive amount? Well, there's only one answer: time. You can do it, but you're not going to do it quick. So if you've got 200 quid and you turn that into, I don't know, say 500 quid, that is a phenomenal growth. In fact, hold on, I might be able to illustrate this for you. This is my Morningstar account that I did, and I said I would run throughout this year. The idea was to double the account. Okay, now we started with 350 in March. We grew it up, and I made 81 quid or something like that, and I took 40 quid out of it, half of the profit. Okay, and then started the new tax year, and I said, all right, and I'll carry it on, because some of the guys just wanted to see the growth. So here we are, we're in June. All right, now already this year, that account is up by 66.4%. Now, there's not a bank in the land or institute that'll give you that. So that money is working for me, and it's paying me. So I didn't take anything out in April, but I did take 64 out last month. So it's now paid me 104, grew the balance, and it's still going. So if I flick through to June, just so you can see it, I haven't traded at a great deal this month. Why? Comes back to thinking about your trades. See it, plan it, trade it. I only trade this between 7 and 8 in the morning. You know, sometimes maybe 6 o'clock, right? But it's normally between 7 and 8 when I've kind of woke up. So I've got 1 hour. If I don't see it, I can't plan it. And if I can't plan it, I can't trade it. And it's that simple, guys. So it's slow, steady growth. But that slow, steady growth this month is 9.9% with a 90% hit rate. And if you look at the losing trade, it's 66 pence. Why is that? Well, this is the kicker. I made a mistake, and I recognized I made a mistake, and I killed it. Fat finger trade. All right? Because I'm always asked, how are you consistent? How on earth can you be as consistent as you are? Well, again, that is an easy one to answer. I don't trade that much. Once, twice a day. Once I'm paid, I stop. Score, stop. Now, if I go into 2 trades, or I rephrase that, if I go to market 2 times and I haven't hit my target, I don't fret, I'll still stop. If I go to market once and I hit my target, I won't go back to market because I don't need to. All right? So it's all about controlling myself and controlling the emotional demons that's inside me, because I can get angry and I can get fearful. I mean, if you look at a big loss in the face, it makes you worry a bit. And they're not emotions I want to go through. I've been through them, guys. And they're not good. In fact, they play hell with you. So the way that I look at the charts is very simple. I want to be in them as least as possible for the most out. And I'll plan the trade out so I know exactly where my pain threshold is. And once I get into pain threshold, I have to start thinking I'm out, but I know where that is. And it's always 2 structures away from where I'm going to enter. Then I need to know where I'm going to get out, the maximum upper point of target. So I have to think about that as well. And once I've done that, the rest of it's easy, because this is what makes me consistent. If I don't think I have this fully mapped and planned, I don't trade it in the first place. It's that simple, you know. I never go into market willy-nilly. I don't rock up, put the screen on, go, right, I'm here, give me a trade. Oh, I've been here 3 minutes. Oh, I think it might do this. No. And again, I'll shout back to the guys in the Scruffy Squad, and they can stand testament to this. I'll see things early in the morning, but it doesn't mean to say I'm going to trade it at that point. They will. They jump in, they get in a bit early, and sometimes I do as well, even though I've waited a bit. But I can wait right the way into the afternoon from early morning for one trade. And then when that trade comes, it's the golden shot. And once it's finished, I'm normally done for the day. So planning is the moral of today's story. See it, plan it, trade it, and it all equals money. And that's the driver. So don't be too frightened of your stops, because it doesn't matter if you've got a wide stop. I like a wide stop. In fact, I like the price to go against me. And the more red it goes, sometimes the more I like it. You know, as long as it stays within the frame that I've mapped out. Because I know if it comes deep, 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 I can get better prices. And then when it comes back up, those better prices can either pay me more, pay me my wages, or get me out of trouble. Something for you to think about. And that's what I do for the Scruffy Squad every day. So, I don't know. Have yourselves a little think. Drop it in the comments. I am going to be having a little holiday next week. I'm going to have a week away in Turkey. But I'm taking my setup with me and a camera. And I'm going to do a Q&A while I'm there. So either email me a question or drop it in the comment below. And I'll compile them. And you get a shout out and I'll answer your questions. How's that? All right. So hope you enjoyed it. Smash the like. Do subscribe, because that'll keep the channel continuing. And we'll be back to it next week. So as always, guys, trade well. Keep your risk managed. Don't be frightened of stops. But above all, do what you love. And the money will follow. See you all in the next one.